Like, this is a great Friday, like we anticipated, like we analyzed clean and 23 pips, a 1 to 3 trade, a simple trade, just as simple as APC, but you need to understand what's going on and what's happening. So, it's your boy Harlem back again with another video just to end our week. We're ending it in a great note, like we anticipated, like we prayed for, like we manifested, and like we prepared ourselves for it and remain positive to it. So, this is another breakdown. I know tomorrow is a Saturday. I need to upload my weekly outlook. It's on the way. It's on the way. So, I'm gonna try and break down how I took a trade on the NAS today during the London session, like I always do, London and New York. So I don't need to say much. I don't need to be on so much shit because this is a basic trade, what I wake up to do every day, daily 4H, hourly 15, take a trade, stop loss, profit, just go about my day. So from the daily time frame, because that's where everything happens or that's where everything starts. So on the daily time frame, we had price closing bearish yesterday on on the 22nd. Price closed bearish, rejected to the upside and closed bearish. So what obviously anticipated it was like price has to have a continuation to the downside. So from the 4H, we saw now price is holding some sort of support because now price was having some previous zones like this one as our support. So this was basically the FOMC movement. The minute movement didn't take a trade on Wednesday and yesterday. So as soon as now I saw price having another bear continuation move to the downside, we simply wait for price to correct or to exhaust before we can look for continuation trades to the downside. So what I obviously wanted to do or was looking for, it was for a break or a pattern to take a continuation trade. A break or a pattern to take a continuation trade to the downside. So when we're holding this support, price broke on on pre-London because I obviously use pre-sessions and session opens to confirm trades. So on pre-London, that was basically like 6 a.m. Price at a break of that level, break back in, pin bar on 8 a.m. This is just like probably like an hour before the session. Price at a pin bar. So obviously with the pin bar, I was simply waiting for a continuation trade to the downside. So because I trade reversals, I trade breakout, I trade patterns, I trade candlesticks, I trade behavior, I trade momentum, support, resistance, whatever that you can say, trends. Obviously, I had a potential bear flag from price now pushing on this, correcting, pushing again, breaking the zone, correcting again. I was simply waiting for what? For an impulsive breakout. Didn't care about the retest. I just waited for an impulsive breakout of now price breaking what? The flag and the lows. This was the flag and the lows. So obviously, when price now broke the lows, that was probably like my entry because I trade when price breaks below, breaks above the candle, whatever. That's how it is. So now, once price broke below this candle, this level, you can say some sort of support on intraday zones. Price broke the zone, impulsive candle, boom. I took a trade based on that very same level, on that very same anticipation, pre-London volume and London volume, and price just continued moving to the downside. So now I know I might not be explaining how I should be explaining, but from the 4H, I saw price was having some sort of a break or a big continuation move to the downside. From that, I had price breaking out on pre-London, breaking break in, giving us some sort of a rejection candle and continuing to the downside. So from the 15 minute, I saw price having some sort of a flag, which is some sort of an exhaustion or a correction before price can continue moving to the downside. So that's just how I took a trade on the NAS, a clean 123, 125 pips. On Monday we had 48. Monday we had 42, 48. Tuesday we had 94. Yeah, I think it was 94. Today we have 123. So yeah, that's just how it is. You don't need to trade every day. Every day is not a trading day. I took a trade on Monday and on Tuesday. Didn't take a trade on Wednesday and Thursday. Decided to come back again today to take a trade, and it's a winner. So it's not that it happens like this every day. Some weeks I lose and I'll be like, what the fuck happened? But it's what it is. You're a trader. You signed, like, you probably like signed a deal to obviously like take the risk, lose the chance, or take the risk. You understand? So I take the risks because I fear losing the chances. So this is the trade I took in the NAS. I took a trade based on, okay, let me try and join it down. I took a trade based on 4H. Uh, the 4 hour had some sort of a bay volume. The 1H had some sort of a break out and rejection. The 15 minute had a bear leg curtain. So once once you find the structure on your higher time frame, what happens on smaller time frame or intraday time frames doesn't matter. If you find a bullish continuation from your 4 hour, you need to look for volume and you look to look for behavior from the 1H. On the 15 minute, you simply wait for continuation patterns like double bottoms, bullish flags, symmetric triangles, and maybe an inverse head and shoulder from the smaller time frames, such patterns and continuations. So that's how I took a trade on the NAS. Bear volume, breakout and break in, rejection, bear flag, break of a bear flag, took a trade. So on gold, there's nothing for me to do. Okay, nah, there is something for me to do because now gold broke out. Gold broke our correction because gold was probably like moving in a sideways movement. I did like took a trade, or I think it was on the zone, the bullish trade. Now price broke back in, broke out again. So from the 4H with this momentum candlestick, what I can simply wait for is for price to pull back or to retest before it can continue moving to the downside, or simply wait for the daily to see how it closes for the week and simply look for continuation trades the coming week. Because I say every day is not a trading day. Don't wake up to trade every day. That gonna fuck you up as a trader. So when you look at German 30, a clean trade, clean trade, clean trade, clean trade, simple breakdown to this trade. So, okay, so looking at German 30 now, price was holding some sort of a, okay, this is a and that. So price obviously is holding some sort of support. This is a major support. Price came back. Okay, price once touched this level on the 7th of March, came back on the 1st of July, and left the zone on the 14th of July, came back on the 22nd of September, broke the zone today. So obviously, with something like this, you also need to simply wait for the daily candle to close, because from smaller time frames, yes, there is something to look at, but from a bigger scale, price tapped once, had a double bottom, triple bottom, support, broke out, rejected the zone. Now it broke the zone. You simply wait for a retest for continuation to the downside. So yeah, German 30, if I can break down this, German 30 was holding this intraday support before we had an overall one until it bounced and it bounced again. So I saw some bullish depletion from this candlesticks. If you can look at how it reacted once it touched this major support and once it touched this intraday support, you can tell there's two differences to it. You understand? So on this current price support, on this current price movement, this one, I saw some bullish depletion from the previous movement to the upside. And I was like, you know what? I will simply wait for a break of this. So I guess I'm explaining it the way someone should understand because I know it might be hard at times. So this depletion and price rejecting like the NAS with a pin bar, bear move on the London Open for continuation move to the downside. So fortunately we hit take profit on German 30, 319 perps. So it's the NAS, it's German 30, and I also have a surprise for y'all. It's a surprise. So I simply saw some sort of depletion and I saw some bear behavior, some bear momentum. If you can check three candlesticks, okay, let me do this now. We had price moving in 7 candlesticks to the upside, 1, 2, 3 candlesticks to the downside. I hope that will make sense to someone. This is a depletion, this is a momentum, depletion and momentum. So obviously with that, this candle was my confirmation an hour before the London Open. This candle was my confirmation. Break of the lows or break of this intraday support with some bear behavior, it's obviously a confirmation that price can continue to the downside. It's also a risk entry trade because you're taking sell trades or you're taking short trades on support, which is like a risk that you're doing. But if you know what's happening or what you're doing, or if you have belief and faith in what you're doing, this will obviously like simply like be a payout. So now on US 30, boom. And again, also like we also hit a P on US 30. Like, okay. What's happening on US 30 is probably like happening on German 30 and the NAS, but it's kind of like low key for people to see it. So the way I explain German 30, it's the way I can explain US 30. But this is more like the NAS. Price hit a bear flag, correction, breakout, reject, retest, continuation to the downside. So price came back to this major support. This is the major support from, oh my God, previous zones, COVID-19, no, COVID December on the 16th of December, which is probably like a holiday in Southern Africa. Price came back to the zone, printed the support zone, and it left that zone for about, okay, December 2021 until it came back 2022 on the 20th of July. So now price is having some sort of behavior that it will break this very same zone. So obviously once price breaks the zone, boom, we'll simply wait for price to pull back or to retest the coming week on Monday. So my outlook will be more exciting than this video for continuation move to the downside. So that's how I also see German 30 or US 30 for my continuation move to the downside or for the coming week. So USD USD CAD obviously price broke some sort of a major resistance, once it printed. Okay, that's what previous lower highs, but it was some sort of resistance. You understand? It all depends on what you place or name them. So okay, now price broke out, came back for a retest, continuation to the downside. This is a hanging man candle. This candlestick, this big candle, is just probably like a hanging man candle, a confirmation that like price will continue moving to the upside. I don't need to go in it, or I don't need to explain as much as I could. But looking at the current price from the hourly time frame, what I'm just waiting for now is for price to break this high to continue moving to the upside, because we did have a double bottom with a potential what break retest for a continuation move to the upside. So USD CAD, I still see some dollar strength and I still see some Canadian dollar weakness technically, but fundamental, I don't know what's happening. But all I know is we have high inflation, we have job rates, I think low job rates, tech chip errors or failures or crash, tech chip crash, and we have the war. We still have a war, which is probably like running for about 7 months or eight, I think. I'm not sure. So we're still not in a good state fundamentally, and technically we're also not in a good state. So what's happening right now? Only God can tell. We as traders will try and um, use this little time which we have through this geopoliticals to build what we need to build and continue moving forward. Because when we're having a market crash with some geopoliticals, it's a great sign for us traders to move to the downside with price. Once we're having bullish fundamentals, it's a great sign for us, for us traders to buy the dip. So it's simply like we're going down with the fund, we're going down with geopoliticals, and we're going up with rising rates and whatever that might be going on. So this is the USD CAD, how I break it down. Price broke a certain resistance, came back for a retest with a double bottom. Now we're looking for a continuation trade once price breaks the previous high. That's it. So on Tesla, because doors always go up on a Tesla, but the stocks are always going down. It is what it is. So price was holding some sort of a resistance until it failed to push to the upside. So this 300 and this 312 to 14 billion. Is it billion or what? Or million? Billion, yeah, because it's a 1 trillion dollar market cap, the Tesla. So the zone, it's a high zone for us traders to move to the downside with, because now price was holding this intraday zone. I did speak about the zone, that please look for a break of that zone for continuation move to the downside. So price rejected this level, took the highs out. If I always talk about price taking highs out, taking lows out, and continuing the opposite direction. So on this instance, if we have a high and price rejects the high and closes to the downside, we simply look for a continuation move to the upside. But if price takes the lows out, opens bullish, opens bearish, rejects bearish, and continues bullish, we simply wait for continuation to the upside. So that's how it is. So now, based on what I took, now once price rejected that zone closing bearish, I simply waited for price to trade below this current market price candle for continuation move to the downside. So that's it on Tesla. Like I say, you can trade stocks, you can trade fundamental, you can trade options, you can trade crypto, you can trade forex, you can trade indices, you can trade commodity, you can trade whatever that you want to trade. Technical, it's always the way. My price action is always the way to win. Price action is always the way to win. I don't know how many times I can stress that out. How you trade that price action, it all depends on you. But at the end of the day, if I saw a bear move on the nest, and you also saw a bear move on the nest, that's it. What happens between what I see between to confirm price moving to the downside, and once you also see that confirms price moving to the downside, it entirely depends on you as a trader. But at the end of the day, we need to see one thing, and that's price moving to the downside. So Tesla, I still see a continuation move to the downside once we break our resistance, because the market will open soon and we're having a high possibility that price will break the zone, retest, continue moving to the downside. That's how I trade. Fail to break, we start looking for price moving to the upside. Bitcoin, Bitcoin, I can say much. Price broke, price broke our major resistance twice, broke back in twice. So I don't know what's next for me. I don't need to take a trade. I don't need to do anything unless price will hold this support for quite a good state on my current price, and I would look for price to continue moving to the upside. That's it on the Bitcoin. Not looking for much, not looking for less. Now on Ethereum, I was having something like this. I was having something like this, some sort of a bear flag or some sort of a bullish channel, which price was trading on until we're having some sort of a breakout. So we're breaking out of the channel and breaking out of some sort of support. Once we retest that very same zone, we can continue moving to the downside because we'll have two confirmations. We broke the bullish channel, we're breaking our support. Why would price still look to be bullish if it's breaking some sort of levels or some sort of zones? Litecoin. So Litecoin, I can also explain how I took this trade. Bitcoin, obviously, it was moving cleanly to the upside with price moving in higher highs and higher lows. So now, once price broke this support, broke back in, hit this retest above, price continued moving to the upside, was now having some sort of multiple rejections from that level with a bear pin bar. Okay, we had a we had a bullish rejection and a bullish pin bar and a bear pin bar and a bear candle close. Once price closed below those very same highs, intraday highs or current market price highs, I simply waited for price to do what? To reject that zone before it can continue moving to the downside. I also hope I'm explaining it the way someone should understand it, because apart from this, I don't know how to explain it. Price broke some sort of resistance on current market price. This zone rejected to the upside, broke back in, retested below for continuation to the downside. Last but not least, we have an oil. Yeah, oil is just oil is just something else. Oil is just something else. But yesterday I analyzed a good trade. So let's look at this level. Please forget about what's happening the side. I don't want to replay. So price now was trading on the support until it pushed to the upside and exhausted, pushed again and exhausted. So now from this pin bar or this rejection, once price took this boom pin bar and closed bullish, it was basically like a bear open and a bullish close. I always talk about price opening bullish, closing bearish. Once price opens bullish and closes bearish, it's obviously a change of a candle from bear to bullish or bullish to bearish. We had a bear candle and a bullish close. I anticipated a clean continuation to the upside once price trades above this candle, but not only above the candle, but above this zone. So with that said, that was how I took a trade on oil yesterday, and it was a clean trade, took TP from that very same zone, but I was too a bit greedy because I was looking for price to continue moving to the upside until I saw price rejecting and took profit inside that very same zone. So current price now it's broke this low, broke some sort of support, but I can simply wait for price to close or for this week to end so I can see what we potentially have for the coming week on oil. So yeah, it's me once again. It's me once again. It's me once again. I'm always here. I'm always around. And I'm having something special. Something special is coming up. Something exciting is coming up. I think I'll be having I think I'll be hosting a show presented by Harlem. Presented by Harlem. So we're having a 350 fee whole week trading mentorship and psychology trading whole week. R500 a month, whole month trading, mentorship, and okay, mentorship and obviously psychology and back tests and for session weekends for the whole month. So this is what I basically have coming up. Date hasn't been planned or I haven't jotted it down, but this will be a 350 fee for a whole week trading and mentorship and psychology trading and back testing and forward testing for that very same week. So if you pay a fee of the whole week of you having to learn how to take trades, how to understand candlesticks, patterns, psychology, all those aspects, you can pay a fee of 350, which you will get the whole week where we trade, we learn psychology, we learn patterns, we learn everything, and we back test and we forward test. For the 500 fee, same thing, but it's basically like for the whole month. So I wake up, I trade with you, I analyze with you, I mentor with you. So it's basically like I don't need to mentor you because I know people who will basically like have to come to it. It's people who can trade that just want to understand some sort of rules or some sort of approaches to the market. So that's it. Those are the two packages that I have coming up. So even though you pay 350, even though you pay 500 rand, you will be in the same group where we trade, we analyze, we do everything, and we basically like use the Zoom session. So we'll basically like from 9 a.m., which is basically from pre-London, 8 a.m. all the way to 15:30, which is like the New York Open. We analyze, we look for trades, we mentor each other, we show each other, and we learn to understand how to break down trades, how to break down the market, how to approach the market, how to find entries, exit points, and mostly how to maintain the psychology, emotions, confidence, belief, doubts, fear, closing winners early, closing losers quick, closing losers late, such type of psychology parts. They will all be broken down with me if you pay. So, like I say, I don't need someone's money or I don't care about your money. If you feel or if you have the urge that you do need to do this, you will text me on Instagram. I always leave my number below. And yeah, we can have a conversation. We'll have Zoom sessions and we can break down the market. So yeah, it's open once again, Harlem. It's 123 pip trade today just to end the week. We had a 48 pip move on Monday, 92 on Tuesday, 94 on Tuesday, 125, 23 on Tuesday, on Friday, which is basically like a 1 to 3 risk entry trade on Friday. It's your boy Harlem. That's all I got on this video. It's peace and love, and I'm out.